Hello, everyone. It's Larry Kotlikoff back with Economics Matters. I'm really happy and excited to have John Rutledge with us today to talk about everything economic. John is an economist who actually matters. Most economists, like myself, have a theory that we matter, but John is somebody who actually makes things happen and has been involved in the real world in a much different way than an academic economist would, although he is an academic economist, has a PhD from University of Virginia, which is in economics, which is one of our top economics departments in the country and the world. If you Google John Rutledge, Rutledge, you'll find the heading Far from Equilibrium Economics, Finance and Investing. So John takes the theory seriously, but realizes that the real world is far from supply equaling demand at every second, every nanosecond, millisecond in every market and all over the world. We got crazy stuff happening all the time. John's currently Chief Investment Strategist and a member of the investment committee at Safanad, a global principal investment firm in New York, London, and Dubai. He's an economics contributor for CNBC and also a senior research economics fellow at Claremont Graduate University at Claremont University in California. He sits on a number of boards of directors for public and private companies. John was one of the architects of the Reagan economic plan. We actually kind of overlapped apparently down in Washington because I was at the Council of Economic Advisors as a senior staff economist, and John was at a much higher level interacting with Reagan directly. He also advised the Bush administration on both tax policy and the reconstruction of Iraq. I guess that's Bush too. John's the honorary professor at the Chinese Academy of Sciences, not an easy thing to get appointed to. He's chairman of Terrace Kids, a nonprofit organization that builds libraries for schools in remote villages in China and Tibet. So he's had an active lecture career talking about global economics, capital flows, financial markets, investment strategies, the impact of technology on the economy, strategies for owning and growing the value of a business. And then he his own in Harvard, he's also run dozens of companies, managed money in marketable securities, private equity, and real estate. So this is like a real person, okay? Somebody's making things happen every minute of the day. When he's not traveling the globe, John, is as I said, he's working with CNBC. He's showing up on Squawk Box, Squawk on the Street, Fast Money, Closing Bell, and CNBC Asia. He's written for Business Week for more than a decade, and business strategies for Forbes for more than a decade. And he's also written a number of books and published in lots of articles, hundreds of articles, Wall Street Journal, American Spectator, China Daily, Barron's, Forbes, Fortune, National Review, the Financial Times, U.S. News and World Report, Business Week. So we have somebody with us today who actually knows what's going on. And the world is a very increasingly complicated from 1 hour to the next place. So it's great to have you here, John, to talk to us about, maybe to begin with, fill in your bio here, starting with where you were born when you were like a 6-pounder. Maybe you started as a 7-pounder. You're a pretty big guy now. And how you got into economics, and then how your career developed, because we have so many young people listening to the podcast. I like to show people exactly how their careers could develop and how they can take opportunities when they are presented, and that everything is not a straight line, that there's a lot of action here, a lot of luck to having a good career when you enjoy, let alone a really super successful one like yours. Anyway, welcome.
My pleasure, Larry. It's just a joy to be here. Well, one of my memorable things of 2025 is getting to sit with you in your office and visit BU. And it's the first time we'd met in person after working down the hall from each other 45 years ago. And I have to correct you with only on one fact, Larry.
Okay.
It's when I was working back then in the Reagan administration, I was working at a higher level, but it was actually a higher level than I should have been working at because I was a 30-year-old kid in a place that was way over my head at the time. But I love teaching kids. I love doing economics, and I love writing about it. From back to the six pounder, I was born in a little town in Illinois. It was called Winthrop Harbor. It had about 1,000 people, half farmers and half factory workers. So I grew up liking to build things and liking to grow things, which is how I ended up building and growing companies, I think, after all these years. I wandered into economics at a place called Lake Forest College. I then went to Virginia because they would actually pay me money every month instead of Chicago, who wouldn't. And taught at Tulane, taught at Claremont Men's College, associate professor there, got tenure, and then I gave it back when I found out that the real world had some very interesting things I wanted to do. And the way that came about is there was a man you and I both knew named Bill Simon. And
Mhm.
after he left the Treasury Department, he hooked up with Booz Allen and he wanted to do a study because he was there during the days when they gave up the gold standard.
So he
And
was a
so,
Treasury Secretary, by the way.
and he was also the energy czar in 1974, as I
Right.
remember.
Yeah, yeah.
Dollar Bill, they called him. And and he called Milton Friedman and he says, I want to build a model of the world, but I want to have flexible exchange rates in it because of the new monetary system. And Milton send him to me, and I built a little model of 10 countries all together with flexible rates, rational expectations at the heart of it, otherwise straight neoclassical.
Mhm.
And I got to spend 2 years as a 20-something-year-old visiting the boards and the managements of 50 gigantic corporations as the wingman for Bill Simon and as the opening act. So this was Fiat, Rolls-Royce, IBM, Xerox, GE, you name it. They were
Huh.
all there. So that was my introduction to the real world. After which I decided I'd rather do that, and I didn't. And I wanted to teach, but I didn't have time to write the papers. And so I've been wandering around ever since. People ask me, well, what do you really like? I say, well, I'm about halfway between Forrest Gump and Don Quixote. Forrest Gump, because I've wandered the world and I have accidentally bumped into the most interesting people and learned so much from them. And Don Quixote, because I keep thinking I can make the world better. So I'll spend 5 or 10 years in China trying to help that. I did the same in the Gulf region in the 70s and the 1980s. And so I'm always wandering around somewhere. But as you said, the world is an interesting and maybe unstable place sometimes. And that's the fun of it is trying to figure it out. But it's great to be with you here today.
Well, great. So it sounds like meeting Simon was somewhat more accidental than foretold, would be fair to say, right? So,
Everything I've ever done has been accident, but some people, there are accidents that, as you said earlier, you can help to manufacture your own accidents.
yeah.
My graduate students, from time to time, every year, someone asked me, what do I have to do to be successful, to have a big career? And I always tell them the same thing. I said, it's not what you do, it's what you are. Because everybody in the world is worried about the instability. What they're looking for is someone they can count on who will promise to do something and deliver. And so, if you can be a person whose feet don't move in a high wind, you can be of use to somebody who has a lot of interesting things to do. And that's really how I've wandered around with mentors my whole life and learned so much from them. And it makes it interesting to be an old man because my mentors are all dead now. So now I'm the old man. And now what do I do?
You have to pass their knowledge down. You mentioned Friedman. Any anecdotes from Friedman? He was such an interesting character.
He was awesome. He was awesome. I happened on a concept when I was a graduate student called I was worried. I had always been interested in inflation expectations. So I ran across a man named Muth, John Muth, who'd written an article about rational expectations. And I thought, that's really interesting. So I built a dissertation around it. my advisor arranged for me to go to Chicago and spend a year in Milton Friedman's money and banking workshop. And I got there and presented the paper. In that workshop, I'm 22 years old, right? In that workshop, Milton Friedman, Don Patinkin, Tom Sargent, Bob Lucas, Bob Barrow, Fisher Black, Jeremy Siegel, everybody around the table was someone who had something to say, and it was terribly frightening to do that. But I did that, and I think it was the first actual empirical test of rational expectations, you know, of interest rates anyway.
Everybody needs to know that Lucas and Sargent got the Nobel Prize for the rational expectations revolution. So it sounds like maybe you really jump-started their work. Maybe you should have been included in the prize.
Well, my guess is they were probably already thinking about it before I got there. They were way smarter than me, but they were sure interesting to work with. I'll tell you, especially Fisher Black. This was 1972, the year he published, you know, Black-Scholes
Yeah.
equation.
So I
So
knew
fascinating.
Fisher and I knew Bob before, quite well. And Tom, I'm interacting, having lunch
Yep,
with Tom in about a month. Great people, the other ones as well that you mentioned. But they are that group to give anything to that group as a group at the University of Chicago, where there's no rules of
right.
behavior, was surely quite nerve-wracking. But you got through it, obviously.
I
So
survived. I survived.
congratulations.
It was really really a fun thing to do. But in the real world, like in those seminars, you learn a lot by making mistakes and getting corrected from your
Yeah.
mistakes. And I think as I think about young people, they don't value enough their character as opposed to their output. And they don't understand that you can try a lot of things, not succeed at all of them, and learn from them and go on to do other things really, really well afterwards.
Yeah. So, John, tell us how if this were CNBC and you're being asked about the state of the U.S. economy, the state of the global economy, geopolitics at this point in time, wh- what would your assessment be? I mean, and also the markets, in terms of where to be investing. Give us the kind of current view of John Rutledge on what the
Sure.
hell's going on.
Well, my biases, everyone has biases. Mine are I grew up learning at Virginia and Chicago, which makes me a free market worshiper. And I spent my early career just doing that, really. And then wandered around the world and learned a lot of practical matters as well. But I didn't really learn about, I guess, economic change until I was the founder of a private equity firm. And we had at one point, our lead investor was General Electric's pension fund. At one point, we owned, I don't know, 12 or 13 companies. And this would have been back in about 1991. So on one day, I forget which day, um, three bankers showed up as a team in my office. And they said, I'm sorry, but we've just had a ruling from the controller of the currencies office, and they've changed our risk rating system. So you remember that loan we just gave to your company? We can't do it anymore. We had a revolving credit line, a term loan, an acquisition facility, and a capital spending facility. Maybe it was $50 million altogether. And they said, as of today, the acquisition line is gone, the capital spending line is gone, the term loan is half of what it was, and you have to have an increased coverage of receivables on your working capital line, which means, of course, the company went broke. Later that week, the same thing happened to another company, and it happened again the following week. Three different banks. So I thought, what's going on here? That's when I learned that there are times when things happen that markets don't use the price to clear, they clear some other way. I think of it as non-price rationing. You can call it black markets if you want. But those credit crises where the banks just shut like a clam and don't lend money at any price, those are the most interesting times. They're the most scary times. And they're the times when I've made the most money in my life coming out of them, too. So that's when I really learned about economics. Well, we're not in one of those today. And the economy is actually growing better than you would think it might with tariffs of this size. we've got a government that changes its mind every day, which means nobody can figure out what their future growth plan is or what capital spending to do. We're fighting with the entire world, which is very destructive. And the stock markets have actually been doing all right, partly because the companies are extraordinarily profitable today. Profit margins on these tech companies are 60, 70, 80%. And so the markets and the real economy are going in different directions right now. And that to me, those credit crises is what I mean by far from equilibrium economics, or you can think of them as cascading network failures in Friedrich Hayek's terms. But so I think right now it's a very challenging time. You know, there's companies down in the stock market, but I wouldn't want to try and run a real business right now. And I sure wouldn't want to be a young person trying to figure out a career.
Question: how financially secure do you feel? Do you have enough money to retire? How much is enough? And if you don't have enough, how can you possibly find that money before you retire? Tough questions. One smart answer: Maxify. Maxify is the powerful online planning tool that takes the guesswork out of retirement. Maxify compares your assets against your fixed expenses to calculate how much you can safely spend every year for the rest of your life. And it shows you safe ways to find more money. Developed by Boston University economist Lawrence Kotlikoff, Maxify makes a complicated problem like retirement planning simple. Maxify. Powerful, accurate, easy to use. Want some peace of mind? Make the smart choice. Maxify. Visit Maxify.com today to start planning. That's Maxify with an I. Maxify. Maxify.com.
Certainly in 2008, we had, we didn't have people running on the banks. We had the banks running on the banks. And I think that's what you're referring to. Now, some people have raised the issue of whether we would have private equity companies go under or this,
Yep.
special, who are particularly leveraged or maybe leveraged with crypto, and crypto goes under, and the whole kind of market of the non-apparent financial market, the shadow market. Is that an issue that you see looming out there? I mean, the shadow market was viewed as the kind of cause of the Great Recession, that people didn't know what was going on, and there was problems in the shadow market. For example, Bear Stearns had a couple funds that were investing in CMOs and these mortgage securities, and they went under. And then basically, this gradually within a year or so leads Bear Stearns to go under, because Bear Stearns took these subsidiaries onto their books, as I recall, and then Bear Stearns goes into question exactly how much these assets were really worth, because things were very opaque, and things are probably just as opaque, if not more opaque. And we've got an administration that's trying to make things, let entities, financial entities, operate with less disclosure these days. So do you really feel that things are safe against that kind of problem for the short run, at least?
No. I wish I did,
Yeah.
but I don't. 2008, as you said, we had a lot of squirrely securities, all of which were essentially created by what we now all call modern portfolio theory, which is really just the statement that all financial markets are in equilibrium at all times. And so all of those formulas are equilibrium conditions. And if you pull that market away from equilibrium for long enough, it falls apart. But that's really no different than any other network. In 1939 and 1944, Hayek wrote two articles, one of which said, what do we mean by the concept of equilibrium, which talked about people's plans. And the second talked about how information about scarcity goes from one person to another across an information network. He actually invented neural networks. And he said the price is the signal that people use to know what they should buy and what they should sell and what they should build. And the thing we know now about network theory, which didn't exist in his time, we know that networks all fail. And we know that financial networks are a certain kind of architecture of a network. It's called a power law network, where there are a few very highly connected things. Think of JP Morgan. and many, many, many things that are only connected to a few other things. That's us, you and me.
Right.
And that kind of a network is very robust to disturbances, things that can go wrong. You can go in there and snip the links between people all day long and not make anything happen unless you snip the link to the JP Morgan or any one of the other big guys, and it all falls apart. That's what happened with Lehman Brothers. They were connected to everybody. Lehman Brothers sent their people out on the street with cardboard boxes on a Saturday, and the entire financial markets fell apart. But what we also know is that networks that have those cascading network failures also come back and grow again because they grew in the first place. So what happens is you're going along, let's say you start out in textbook full equilibrium, and then people do silly things like Minsky wrote about, and then somebody finds out the emperor is wearing no clothes and it all collapses. At that magic moment, there is no credit at all. If you have cash at that point, other people are forced into selling their best properties. So you can buy them at half price. And so in my 50 years in private equity, I've made all of the money every 10 years in 2 of the 10 years. It's the 2 years coming out of a credit crisis. And right now, we don't have one, but we have, as you said, a lot of the ingredients that could make one. Crypto is one thing. Private credit, I'm not so worried about that because private credit is the black market where people can get money if the bank won't lend them money. And that's what's kept the economy alive this year. Commercial banks have loaned negative amount of money to businesses in America for the last 2 years. It's all been private credit, like Ares and guys like that. So you can have those collapses. They happen every 5 to 7 years. When they do, they
Yeah.
don't look like the textbook at all. And you have to have too much cash when they happen so that you can buy people out who
So,
didn't have
so
it.
two questions. Is the private credit compared to, let's say, the public credit through banks, is the private credit, my understanding is it's less disclosed, that it's much more
Yep.
opaque. So that's a big issue because of something I'll say in a second. But given what you're saying, would you be out of the market at this point? Would you be particularly conservative in your investing?
Well, this is the loan sharks market because the banks are shut. And in private credit, like in private equity, there are people who buy things that are not subject to insider trading laws because they're not public securities. So you can actually find a company you want to buy and go and live in the basement of the CEO for 6 months if you want to, and learn everything you can about the business. So the companies that are bought and controlled and managed by the private capital industry are managed very tightly. They have sometimes too much leverage you'd like them not to do that, but they're all over those companies on a daily basis. Where you get trouble is when somebody buys a private company and then syndicates it and sells out securities to the people you're talking about who don't really know what's going on. That's where you can have the problems. The companies that get private credit are normally smaller and probably of lower credit quality than the ones who would get money from a bank. But right now, that's what's kept the economy afloat for the last 2 years.
Out of equilibrium, that was your term, right?
Yep.
Far from equilibrium, right? Uh,
Yep.
so my view of what happened in 2008 and in our prior, many of our most, if not most of our prior recessions, about a third of which have the name panic in them, panic of,
Yep.
or it doesn't have that name, it'll say, or crash of, it'll have some clear event that occurred that led to a panic. So my view is that we have not, if you think about 2008, not bad assets, but bad information. We didn't have disclosure, and that
Right.
I wrote a paper called The Big Con, which is on my website. I don't know if you've seen it. It's a short, it's a paper for the Milken Institute, so it's eminently readable at kotlikoff.net under articles, just The Big Con. You remember there was a movie called The Big Short about all these bad actors and bad assets, and the two together were a bad mix, and that is what brought the economy down. And if we can just re-regulate and get rid of the bad stuff, That was the Dodd-Frank reform. We will never have this problem again. And of course, Dodd-Frank basically we had a bunch of houses built out of straw and they blew down, and we had some built out of brick, which never collapsed, and we built everything out of straw. That was Dodd-Frank, is in my opinion. But so my view is that from looking at the data, that all the allegations about the bad assets and the bad actors just weren't true, and the bad leverage and the bad rating and the bad advice and the bad government behavior. None of it appears to be true given the facts developed in the 10 or so years after 2008 by economists looking at major data sets, not by me per se, but rather that because of the opacity that there was a flip in the equilibrium. So this is connected to far from equilibrium, but it's not that we have a kind of a single equilibrium that we haven't actually, it's there, there's a single one, and somehow we haven't actually got supply to meet a demand at the right price, but instead that there's multiple equilibria, and it's a function of beliefs that people can panic, and if they don't see what's really going on, they can produce self-fulfilling prophecies, which is the term coined by Robert, I guess, K. Merton, the famous sociologist, father of the famous finance economist, Robert Merton, who got the Nobel Prize along with Scholes for the work with Black, and sure it passed. So does that enter your thinking about the economic disruptions, multiple equilibria? Is that part of your views?
Sure. I think the lack of information is really at the heart of it. And you're talking about disclosure, which is one thing. It's also true that the securities were built with too much confidence in an underlying economic model, which is, you can think of it as modern portfolio theory if you want. It's the idea that you can measure the risk with the standard deviation of something, that you can measure the return with its average, and that it's more or less applies all the time. If you believed in modern portfolio theory, which I started young believing, you would figure that cash really pays you almost nothing. The stock market pays a lot. And so the optimum portfolio that they talk about is one that's almost entirely invested all the time and has very little cash in it. But that world I told you about a few minutes ago that falls apart every 5 or 10 years, in that world, the return on cash during those 2 years when the banks are shut is 20 to 30% a year. That number never appears in the Wall Street Journal because the Fed is pushing down the Fed funds rate, and the recorded interest rates are low, but those are the rates at which you can now borrow money. If you want to get money, even with secured credit, you have to get it from what my friends call the street, which means Main Street. And the black market charges you 20 or 30% for a senior loan. So over a 10-year period, if you hold more cash than MPT says you should, then you'll make more money than a guy who followed the test.
Because you'll effectively be getting a 20% return, because you're on the borrowing side, not the lending side.
That's right.
Yeah.
Want more money, less risk, and a better life? Buy Money Magic, a new book by Lawrence Kotlikoff, Boston University economist, personal finance expert, and best-selling author. Whether it's education, career, marriage, housing, investing, retirement, Social Security, IRA, or 401k decisions, Money Magic delivers scores of secrets to raise your living standard. Financial journalist Jane Bryant Quinn says Money Magic is a must-read. Nobel laureate George Akerlof says Money Magic is quite probably the best financial advice book ever written. Financial guru John Malden says, you'll love this amazing book. It's full of wit, wisdom, and startling paths to a better financial life. And columnist Scott Burns calls Money Magic a funny, brilliant read, offering wildly powerful, unconventional choices that can literally change your life. Get Lawrence Kotlikoff's Money Magic today at Amazon, Barnes & Noble, and independent booksellers.
So that's a very interesting and deep insight. It never quite occurred to me, but I think it's a great one.
You know where that idea came from for me, Larry? I've always been fascinated in two things. One of them is time, as you are from all your wonderful research. And the second is information. Information, this last year or two, I read a ton, and most of my reading has been in two areas. One of them is neuroscience, especially in the area of fear and tribal behavior. A second is information theory. Claude Shannon wrote a paper in 1948, the same month I was born, which was the baby of information theory, and it has driven all of the technology change since then, including these companies now that are worth billions and billions or trillions now of dollars. And the early work, as I said, was done by Friedrich von Hayek, who said, in an information network, if I'm a plumber, I need to know how much masking tape costs and whether I can get it. And I need to know about pipe. Where do I get the pipe? So there's all sorts of knowledge in these people's brains, and they can't afford to know everything in the world going on about what's scarce and what's not. So the market system is a special creation that transmits only the information that person needs to know to that person using prices. For that to work, that person has to trust that the price is giving him information. And so when you have a Lehman moment, you had a market where people were on their Bloomberg screens were trusting the prices that they actually reflected scarcity. And then all at once, people decide, wait a minute, I cannot trust that information. I cannot trust Lehman Brothers. What's going on? So everybody backs up. And when they back up, the information stops flowing. And that, I
And the
think, is
loans
how
and
you end up with these collapses.
and the credit lines, they collapse as well.
Yeah.
So if you had to connect what we're talking about now back to the rational expectations discussion from when you were 22, it's not clear how you can have rational expectations about a world with multiple equilibria. What exactly can you expect?
Well, you can have the best you can do and have it still be not very good. And so rational expectations may mean something different than perfect expectations. Back in my day, I wrote the dissertation and a book about it later, we thought there's a very simple way of making a model, something like Tobin's model or Friedman's model, and government policy in terms of money supply and spending and tax rates were the drivers. And so that was a model you could understand. So then to me, rational expectations was the idea that the other guy in the bond market is probably smarter than me, and he probably knows that model too. So if I can use it, he can use it. So there's no reason Wall Street should be any worse than the economics profession at forecasting inflation. And so therefore they should show up in interest rates. That's really what I ran a test of. Later in life, I had a similar epiphany. I've only ever had two good ideas in my life. That epiphany was I was flying back from New York to Los Angeles across the Midwest, and I looked out the window and I looked down and I saw a farm and a barn and a tractor and a small town and a factory and a road and cars. And I thought to myself, none of that stuff is in the economic model that I'm using to forecast the economy. Because economic models normally talk about GDP flows, and to the extent they have an asset market at all, they just bring it in as an interest rate. And I thought, all that stuff is owned by somebody. Mom and pop own it. What if they're just as smart as those guys on Wall Street too? And they're thinking like portfolio managers. So I went out and found information about the balance sheet of the country. And I discovered at that point about half of the assets in the country were hard assets and half of them were financial assets. The return on financial assets is what everybody writes about it in the business schools. But the return on hard assets is something different than that. Take a house, for example. You get to live in it, but you have to fix the toilet and the roof when they break. But it has a capital gain or a capital loss, and maybe it has an interest cost if you financed it. All that added together is a return. And the return on that stuff and the paper assets ought to balance each other out according to, you call it arbitrage or the second law of thermodynamics as you choose. Those ought to balance each other too. So to me, the way policy hits the world is if something happens to make inflation go up, then the return on owning a house goes up compared to the return on owning a bond. And everybody decides, you know what? I'm going to sell this one and buy that one. And the prices move. That's really what I worked on after 1980 and what I call asset first economics, which just says the balance sheet is 20 times the size of the GDP accounts. So almost all the stories that we talk about in our life as economists are balance sheet disruptions, not GDP stories. But GDP is almost all we teach in school.
Yeah, I guess I would say maybe this connects to what you just said. If you look at the real underlying economy, it's much, the stock market volatility doesn't connect to the real underlying economy. So if we could just invest, if we could be if everything was, let's say, private equity, so there's no public
Mhm.
companies, and we could all be shareholders in all these private companies and get a share of each year's profits, we would have a very steady stream
Yes.
of income. And it's really and I've been puzzling over the years how one could actually manufacture a security that could actually produce that, but haven't figured that one out yet. It's still a puzzle. But let me take us to outside this kind of inside the ballpark discussion and go outside to the real world of living in right now. So we've got, let me just give you some names of Ukraine. Let's start there. And then let's talk about the Middle East, which you're quite familiar. And then let's talk about South America and NATO. And well, let's say maybe Ukraine and NATO, and then Middle East, and then Latin America. And then, of course, all this is Trump, but go for it.
In my world, your ability to produce anything is driven by information and by your access to capital. And part of the capital stock of the world is knowing what you can count on. And right now, we're showing people you can't count on us. So I think this is a tragedy. And I'll tell you a small personal story. I spent a lot of time in Maui over the years, and I was coming back from Maui one time, landed at LAX at midnight with my wife and young child, and I looked on Google and it said you can get home in 49 minutes because I live in Newport Beach and because it's 49 miles and the speed limit is 60 miles an hour. So I got on the freeway and I got home 3.5 hours later because they had closed the freeway and I had to take surface streets the whole way and everybody else did the same thing. So that was one where I was thinking, well, what happened there? I was driving as fast as I could. And so I was totally fully employed, but I wasn't getting there. And what had dawned on me is that there are underlying assumptions, like the assumption that the freeways are working in economics too. And that underlying assumption is that there's a price system that's allocating resources with good information. And so what tricked me is I got into the freeway and that assumption turned out to be wrong. And this was a different state. It was a state where there are no freeways. You have to take some other way home. And our whole concept of a production function has those assumptions built underneath it. So I started thinking, well, there's a production function like you teach the students about, but there's maybe another one or many more below it if something goes wrong. And if something goes wrong, then your ability to generate incomes for people goes away too. But what's going wrong now? We all live with all these assumptions. Well, we had nuclear weapons, but nobody will ever use them. Don't worry about it. We China is a second-rate power. America runs the world. Don't worry about it. You can count on the U.S. to guide and drive free trade as an idea, and always try and make the world have better trade relations than before. You can count on the U.S. to support NATO to keep the Vladimir Putin at bay in Europe, and you can count on the U.S. to not invade other countries or not even threaten to invade other countries. even though our Secret Service agents sometimes broke those rules. And all those assumptions have gone out the window now. So this Trump government is not just what's going to be the tax rate, it's are there any rules at all that people can count on to make decisions? And I have to say, I don't think there are. And so on a board of directors of a company, I have to make a decision about buying or selling an asset that's going to generate cash flows for the next 20, 30 years. The duration of the cash flows underlying the stock market is more than 40 years long. And so, how on earth am I supposed to make those decisions today? Now, some of them are easy, like if the government pays me to buy a certain asset, I'll take their money. But an ordinary business just trying to go forward can't do that. So I think on your list, I think we made a terrible mistake by not supporting Ukraine. I think NATO should have closed the sky on day one. They should have called Putin's bluff. On the Middle East, the Arab countries are doing well, and I have a lot of experience in that part of the world. Iran looks to me like that government's going to flip. And when it flips, nobody knows what happens next, as always happens when governments are deposed. So big wild card over there. The same between Israel and Gaza. NATO, if I were the Europeans now, I would not count on the US for anything. And I would build my own NATO. And that's just exactly what they're doing. Invade Greenland, that's a disaster. It's a terrible idea. The US has had by treaty the ability to build military facilities in Greenland for decades. And we did. And we closed, I think, 15 of them because we didn't want to pay to keep the people there. South America, Venezuela was a disaster with a terrible government and a terrible leader. I don't want to defend him, but invading another country and saying that you're now running that country and you're taking over is not a good idea. And so I think we've got an out of control government with a tweet that happens once a day that surprises people. Like last Friday, it was, oh, by the way, defense companies, you're not going to be able to do stock buybacks or pay dividends anymore either. And everyone said, what? So market drops all of a sudden. And you have one of those almost every day now. And so generally, I like to bet against those fears because people get too excited. But these are big, big question marks people have. We need to be able to predict what government policy is going to be in order to have a decent economy.
So John, so I wrote a column 2 days ago about Trump's extreme narcissism and its consequences, pointing out that what we're seeing, in my view, is not just narcissism, but accelerating, deepening narcissism.
Yep.
And apparently, medically speaking, people who have this disease it can get worse with age.
Yes.
Do you think we're dealing with somebody who's kind of Manchurian candidate here, maybe working for Putin, or do you think we're dealing with somebody who's mentally ill, or do you think something else, or do you think some combination?
That's the question, isn't it? And the fact is, we don't know. What do we not know? We don't know all of the details from the Epstein files. We need to know that. That's absolutely number one. The fact that they're working so hard to hide them is very bad, has a very bad look. And so that's bad. These random blurts on tweets on social media overnight are not the work of a professional policymaker at all. So whether that means someone is losing their marbles or they're just not up to the job, I don't know. But that's no way to run a country. And so it's all of these behaviors, of course, consistent with two ideas. One is the idea that there's a connection with Vladimir Putin, which is a lot deeper than the one that people talk about. Or another is that Trump and his crowd have decided that, well, the world will be better if we divide up the world into three neighborhoods, just like the mafia does. Our neighborhood will be the Western, North and South America. We'll let China have Asia and we'll let Russia have Europe. And then we can just talk us three guys when we want to change something in the world. That's been a formula that's worked for a lot of families for a long time. And that's what it looks like we're doing. And I think that's a disaster if that's the way this goes. We'll get some evidence in November what people think about it when we have the midterms, which could actually be a valuable piece of information. And it could actually change the behavior of Congress, which has so far just stood back and watched this whole thing unwind.
Question: how financially secure do you feel? Do you have enough money to retire? How much is enough? And if you don't have enough, how can you possibly find that money before you retire? Tough questions. One smart answer: Maxify. Maxify is the powerful online planning tool that takes the guesswork out of retirement. Maxify compares your assets against your fixed expenses to calculate how much you can safely spend every year for the rest of your life. And it shows you safe ways to find more money. Developed by Boston University economist Lawrence Kotlikoff, Maxify makes a complicated problem like retirement planning simple. Maxify. Powerful, accurate, easy to use. Want some peace of mind? Make the smart choice. Maxify. Visit Maxify.com today to start planning. That's Maxify with an I. Maxify. Maxify.com.
So Trump, I think, said maybe today or yesterday that if he had had the ability, would have, or maybe that I guess he should have grabbed hold of the voting machines, confiscated the voting machines after the 2020 election, suggesting that he would do it in this election. So the big question mark is whether we're actually going to have an election or whether it's going to be a stolen.
Fair question. You can generate crises and then say we're holding it off because there's a crisis and delay it indefinitely. And what are the odds of that? They're not zero. And so that itself is a very scary thing. And so who knows what this guy is going to do? But the one thing I do know, I've never met him. So I have to say that. I've briefed his cabinet in the first term, and I've met other people close into the group and in the family, but I've never met President Trump. But I'm quite sure that the volume of stuff that he puts out, special orders, ideas, is incompatible with his level of brain power. So there's a machine working behind there with a lot of hours of work by a lot of well-trained people for every one of these announcements that comes out. And we saw the the Project 2025 stuff. Heritage Foundation was a big player in that, but there's an awful lot of money that's at work out there coming from Silicon Valley, which I don't like either. And I think the big risk is that right now we have a completely unpredictable government. But if, for example, President Trump were taken out or decided to leave, we might have a worse one because we might have one that's under the control of the venture capital community.
Yeah. It also seems that his minions here, his toadies, are going overboard to remember the cabinet meeting where he's asleep at the cabinet, and this is going on for a couple hours, and this is like straight out of South Park. The cabinet ministers are taking turns praising him to the T, and he's asleep. And I'm sure that they're doing this because they're worried that if he wakes up or if he's maybe partly awake, if he doesn't hear enough groveling, they'll lose their jobs. I mean, it's that crazy. And then you have people like Stephen Miller seeming like they have they're making rules. And this interview he did with the New York Times suggested that he didn't know a fair amount of what was happening, what was being done by his administration, and not taking responsibility. Well, that wasn't me who did that. And, so I think you see this in China too, that she gives, at least I was told this by people in China, that she gives general statements about what he'd like to see, and then officials go overboard in trying to, appease him or make him happy.
Sure.
And end up screwing things up. even
Well,
worse.
that's what happens when you have one guy deciding everything. It can fire you at will.
Yeah.
I spent time in China during Hu Jintao's days, and I knew him and all the members of his government. And those days, and before then as well, there's a place across the street from their version of the White House, which is called the Great Hall of the People, that's got housing in it for 100 people. And those 100 people are the senior members of the Communist Party. And they all have red phones, honest to God, on their desk. And the chairman has one on his desk too. And until Xi Jinping, no one would ever announce anything out of the Chinese government that hadn't been around that group of red phones and talked about. So you got a very stable set of policies. You can think of it as the central limit theorem or the law of large averages for somebody who isn't into statistics. When you have one guy who doesn't consult anyone else when he decides things, the central limit theorem doesn't work anymore. And so you don't get any comfort out of averaging opinions across 10 or 12 or 100 people. And that's a that's a very dangerous situation.
So do you think that China, I mean, what's your take on our policy towards China in general, even going back to Biden and Obama? And what do you think and then also if you could comment on Taiwan and what the likelihood of
Sure.
their taking Taiwan is, because you're kind of raising that as a possibility.
Sure. The, maybe the best thing to say about US policy toward China is it has generally been made by people who've never been there. And so
I view
you
exactly
you
that.
have you have high sounding principles. You have trade negotiators down negotiating sardine trades and things, but there's nobody in the middle that has experience on the ground. And that's what's really been missing. I always thought not understanding China was our biggest problem. During Hu's days, there was a real trend in China that was bringing them in our direction. The young people in the just after the millennium, were walking around wearing cell phones on their belts that were plastic mock cell phones so they could look like they were modern, because they couldn't afford a real one. They were wearing blue jeans. They wanted to be Americans. We were importing their students, and we were making great headway at that point. Xi Jinping taking over really surprised everyone with the way he behaved. In his early days, he was a disciple of Jiang Zemin. And later on, he humiliated Jiang Zemin, and he's completely taken over that government. So the worry you have there is that he's slightly younger than me. But that means he's going to die one day in the visible future. And if he has something in his head but that he has to achieve during his lifetime, that window is shrinking. And right now, the obvious thing he could achieve is bringing Taiwan back in. A second thing, which actually I think would be much healthier for the world, is if they took ownership back over Manchuria or Siberia, which was taken away from them by Russia after the Opium Wars 100 years ago. But
all of Manchuria, or some part of Manchuria?
Heilongjiang is northern China. If you go up from there, all of what is now Siberia was once part of China. And there have always been stories in China about getting that back from Russia one day. And so if I said, what's the craziest bet you could make that might be true, it would be China ends up owning Siberia again.
Okay, here's
Will they
another.
own Taiwan? I don't know, because if you blow Taiwan up or impair the production facilities there, nobody's lights work in the world because all of the advanced chips come out of those factories. And so that game has been going on for a long time. With Biden and before, it was always a negotiating game. W had an advantage because his father had been the ambassador there early on. He had spent time in China as a young man riding a bicycle around Beijing. But other than him, nobody knows. I spent time with Trump's cabinet in his first term, and we were talking about China policy in particular, but most of the people in the room had never actually been there. And so they didn't understand the way the place works.
JD Vance said he didn't need to go to Ukraine to know about Ukraine. Yeah, the ignoramus, and he's vice president. So I think this idea of a shrinking window that may also apply to Trump, that he sees
Yeah, and Putin
lifespan,
as well.
and Putin, they're going to go anyway, so they want to mark their turf. If Taiwan were to be invaded tomorrow or today, do you think the U.S. would militarily intervene? Your best guess.
My best guess is I don't know.
Okay.
I would say no. I would say no because it would happen so fast that
Yeah.
it would be a different game by the next morning. And the problem is, what we now think of as Taiwan would still be there after that, because all of the production facilities of TSM are made out of ordinary bricks and mortar, like all the other buildings in the world, and they fall down. And
We
so
would probably maybe we respond by just blowing up the factories. It's
well,
probably,
or they do, they're already wired with the Taiwanese guys. Who knows? But if you lost TSM's production capacity, you would seriously undermine the technology of the entire world. And I tell you, I don't want to own any of these tech companies the day after that.
including China or not? China's
Sorry?
making, including China or not?
Oh, yes, absolutely. I mean, China has the ability to produce a lot of things, but not to produce the advanced chips that are powering artificial intelligence and a lot of
It's
the big
getting supplied
advances.
by Taiwan as well.
Yes, absolutely,
Okay.
absolutely. I think in terms of the high end chips, the 3 nanometer, 5 nanometer chips, Taiwan produces 80% of them for the world, something
Wow.
like that, 80, 85%.
That in itself and how they got to that situation is a fascinating story. Let me ask you
It
one
is.
question. I did a podcast that hasn't come out yet with a very prominent and important economist in Brazil, Paulo Noriega
Yeah,
Batista. I don't know if you know him, but uh,
sure.
he was at the World Bank as a representative of Brazil and some other countries for many years,
Mhm.
and started the BRICS Bank with some other folks, the New Development Bank. So Paulo penned a blog today in effect, calling for Brazil to get a nuclear bomb because of the fact that the only way that they can defend themselves in this context from Lulu being taken
Yeah,
out or blah 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 is to have a nuclear weapon, and presumably that would be in the form of some kind of a suitcase bomb that they could deliver in New Manhattan or Washington D.C. when as needed. So I can see all these countries in the world going to North Korea to buy their suitcases and have
yeah, yeah.
all the secret agents of all the countries that could potentially be taken over, including Greenland, walking around Washington with suitcases, just to let maybe they're empty, maybe they're fake, but maybe they're also filled. Um, do you see
Well, for all
that?
my sins, Larry, I've actually spent time in North Korea as well, negotiating a treaty that never happened. But they're a total wild card. And I think the lesson of the last year is if you're a country that has nuclear bombs, you can make anyone else do whatever you want. And it's true for Russia, it's true for China, it's true for the U.S. And if I were someone with the capability of doing that, which right now just means money and information, I would be doing that too. So that's out of the bag. Let me tell you one last little historical story. In my early career, I got very good friends with a fellow named Dick Cheney. We used to go skiing in Beaver Creek together. And during the time I think he was out of office running in the primaries for president. I ran into him at a hotel in Phoenix, in Scottsdale, and I said, "Dick, how you doing?" We're doing fine. It was just after the Soviet Union had fallen. Russia was starving to death, and they were having a tremendous collapse of their economy. I said, "Dick, I have an idea for you. Why don't we make an offer to, it wasn't Putin yet at that point. Why don't we make an offer that we will buy your nuclear warheads from you with food that we have stored in all of our grain elevators to support our farmers. And every time you give me a nuclear warhead, I'm going to take one of mine and give that also to you, and then we're going to destroy both of them. I thought you could have destroyed the entire world's stock of nuclear weapons in that one year. And when I said, Dick, why don't you try and do that? He says, we could never get that plan through Congress because it would cost so much money. So I thought, I give up trying to help the government make decisions.
Yeah, I later in life, Cheney was both of us were speaking at some investment conference, and they asked me to sit, would you sit with the vice president because nobody else is there to sit with him?
Yeah.
So for lunch. So I sat down at this table with Dick Cheney, and he had his heart lung machine
Yep.
attached. At that point, he wasn't separated, didn't have a new heart. But so we talked a bit, and then some other people came over, and he was really quite extreme about China at this little conversation. I mean, really, China was a huge threat.
Yeah.
Where is this coming from exactly? Maybe he knew something I didn't know, but
Yeah.
anyway, things have become very tribal, very paranoid, very crazy, but we still have John Rutledge to steer us into the future. So thank you so much, John. We will be in touch. And as I said, this is our connecting at Boston University recently. It's the beginning of a long friendship. Beautiful.
Thank you. Delight to be with you, Larry, and I look forward to seeing you again in Boston.
Great. Thank you.